This is a presentation on public finance. Public finance is the study of how government generates, spends, and manage funds to serve its citizens and achieve macroeconomic goals. It involves managing public revenues, expenditures, and debt while also addressing issues like unemployment, price stability, and economic growth. The macroeconomic objectives of government include full employment, price stability, economic growth, equitable distribution of wealth, favorable external balance, and redistribution of income and wealth. The public finance ideologies are two. The first is the organic view. This emphasizes community welfare, and the mechanistic view. This focuses on individual-driven policies, talking about capitalist countries. The sources of revenue for the government are grouped into two. We have the non-exchange transactions, which include taxes, royalties, fines, donations, VAT, and so on. And we have the exchange-like transactions, such as passport fees, toll gates, sale of national assets, foreign investments, and so on. The revenues in charge of collecting the agencies in charge of collecting revenue for the government include the Central Bank of Nigeria, the NNPC, NAFDAC, we have the SON, we have the EFCC, we have the NTA, the Power Holding Company of Nigeria, the Federal Inland Revenue Service, and so on. The revenue collected by government are applied on capital projects such as construction of highways, bridges, airports, seaport, in summary, construction of infrastructures. They are also applied on recurrent expenditures such as general expenses and workers' payroll. They are also used for sectorial payments, allocating funds to ministries, departments, and agencies. They are also used as donations to poor countries and the maintenance of the armed forces. Some of the economic policies of government include the fiscal policies, which involves the use of taxes and transfer payment to regulate the economy. We have the monetary policy. This entails the use of lending rates to regulate credit availability in the country. We have the price and wage policy, and we also have the commercial policy, which entails the use of tariffs and foreign exchange rates to control international trade. How do governments cope with a deficit budget where the expenditure is more than the expected revenue? One of the things that government does is to issue or sell treasury bills and government bonds. They also increase taxes and tariffs. They suspend capital projects, and they engage in borrowing from the International Monetary Funds, the EU, the African Development Bank, and so on. And budget is a yearly document that outlines the revenue and the expenditure for the year. It is used for performance evaluation and for planning. Then we have the externalities. The effects of the provision of goods and services by government. The effects may be positive or negative. It is positive, for example, when there's income growth from university establishments. It is negative when there is pollution from industries. And so we also have privatization and commercialization. Commercialization is the process of making a public enterprise self-sufficient and self-accounting instead of depending on government for its operations and existence. On the other hand, privatization is the transfer of ownership, interest, and control in a public enterprise from the government to the private sector. And lastly, we have the intergenerational equity. This states that government must borrow responsibly to avoid burdening future generation. Government should borrow funds it can be able to pay back. Ways of reducing deficit external balance related to the above: increased tax and tariff on imports, sell national assets, wage cuts of public employees, increased capital projects, commercialization of some key public institutions. In conclusion, public finance is important for equitable wealth distribution, for economic growth, and for sustainable development. Effective policies, responsible borrowing, and efficient management of funds will ensure long-term economic stability. Thank you.